In Asia, markets traded mostly higher today ahead of a crucial meeting between President Donald Trump and Chinese leader Xi Jinping, which many are hoping will help ease trade tensions between the U.S. and China. Japan's Nikkei 225 rose 85.58 points, while the Topix index added 5.81 points. South Korea's Kospi was higher by 5.88 points. Greater China markets lost their early momentum and declined in the afternoon. The Shanghai Composite gave up gains to close down 34.29 points, while the Shenzhen Composite was off by 29.94 points. Hong Kong's Hang Seng Index fell 0.93% in late afternoon trade. In Australia, the ASX 200 added 33.3 points, with advances in most sectors. And U.S. futures points to a lower open, losing Wednesday's gains, its biggest rally in 8 months after Powell signals rates are near neutral. The Dow pointed to a 0.34% low for a start, S&P 500 down 0.37%, and Nasdaq down 0.63%. And away from the equities markets back here, Tanzania's central bank has suspended 5 banks from trading in the interbank foreign exchange market for 1 month for breaching regulatory rules. Barclays Bank, Tanzania Exim Bank, UBA Bank, Bank ABC, and Azania Bank were all suspended from the market for violating the market's code of conduct. The suspended banks either traded at off-market rates and or did not submit to the central bank the transactions they made contrary to the requirements of the Code of Conduct. The suspension comes after the regulator conducted surprise inspections of foreign exchange bureaus in the northern town of Arusha, a tourist and gemstone trading hub. There are more than 40 commercial banks operating in the East African nation. And South Africa's Central Bank Deputy Governor Daniel Mlele says the rand will remain volatile in 2019, making monetary policy complicated and focused on long-term inflation factors rather than short-term market shocks. The bank expects the rand to average 14.50 against the dollar, but trade will be volatile, forcing the Monetary Policy Committee to remain flexible in its responses. The rand has slumped more than 20% against the dollar in 2018 since a sharp sell-off of emerging markets assets in April, triggered by rising U.S. rates and worries about a trade dispute between the United States and China. The South African Reserve Bank raised lending rates for the first time in nearly 3 years last Thursday by 25 basis points to 6.75%, saying it could risk waiting for risks to inflation to materialize before acting. And the Fitch rating says that the Nigerian government cannot be relied upon to provide sovereign support for local banks due to the country's weak ability, particularly in foreign currency. In a new rating report for 3 Nigerian lenders, Access Bank, GT Bank, and UBA, the global rating agency says Nigeria's fragile economic recovery is restraining the growth prospects and asset quality of domestic banks. According to the agency, there are no clear messages of support from the authorities regarding their willingness to support the banking system. The support rating floor of all Nigerian banks was therefore moved down to no floor and support ratings at 5. Fitch says this rating reflects its view that senior creditors cannot rely on receiving full and timely extraordinary support from the Nigerian government if any of the banks become unviable. And the World Bank expects Nigeria's economy to grow slightly less than 2% this year, largely driven by the non-oil industry and services sector as the approach of elections keeps foreign investors away. Nigeria emerged from a recession last year, but growth remains fragile, with the government borrowing both at home and abroad to help fund its budget. It has raised almost $9 billion from the Eurobond market since 2017 to boost growth. GDP grew by 0.83% last year after shrinking by 1.58% in 2016, its first annual contraction in 25 years. For this year, Nigeria's central bank is projecting growth of 1.75%. The World Bank expects the fiscal deficit to widen in 2018, with portfolio investors exercising caution ahead of the election, despite rising local yields. And British Development Finance Agency CDC Group plans to invest up to $4.5 billion across Africa over the next 4 years to boost ties with the continent as the country prepares to leave the European Union. With Britain set to leave the world's biggest trade bloc in March, government officials have been touring Africa, hoping to bolster ties with many economies such as Nigeria, South Africa, and Kenya. CDC, which has invested nearly $400 million in Nigeria and committed $25 million to a local private equity firm, Synergy, to support small and medium-sized companies in Africa's most populous nation. CDC also provided a $100 million loan to Nigerian fertilizer company Indorama. CDC aims to open a regional office for West Africa in Nigeria's commercial hub of Lagos early next year and establish a presence in Nairobi, while also expanding in Johannesburg and with representative offices in Abidjan and Cairo. And in the absence of law and order that followed the 2011 revolt, the number of unlicensed buildings rocketed in Egypt. Authorities say they want to end unlicensed construction on farmland and provide homes for the poor, but analysts say many of the government's new developments are too expensive and lack adequate infrastructure.
In the home he shared with 11 relatives, Mohammed Abd al-Hamid had no room to start a family. But since he put up a house on a nearby field in 2016, he has paid $4,500 in fines for building on agricultural land.
Thus far, I have paid fines up to 80,000 Egyptian pounds, and my case has still not been cleared. There was no alternative. They've collected the value of the land as if the land belonged to them. It is as if they bought it from me and then sold it back to me.
Egypt's population of nearly 100 million is growing rapidly, and about 38 million live in unplanned communities. In the turmoil after the 2011 Arab Spring, the number of unlicensed buildings skyrocketed. Now authorities are cracking down on residents who build on farmland but are providing few alternatives for those who need cheap houses. People who build on agricultural land now face up to 5 years in prison and a fine of up to 5 million Egyptian pounds. Before the law was revised in January, the top fine was £50,000 and the prison term wasn't specified. Authorities say they want to end unlicensed building on farmland, reduce overcrowding and provide homes for the poor. But analysts say many new government housing projects are too expensive and have poor services. As a result, large numbers of new homes are unoccupied, while people still build on farmland in areas where housing demand is high.
Definitely, building violations will impact the productivity of agricultural crops. Violations are not just measured on the scale of one municipality, but you measure them in comparison to all municipalities across the country.
In an effort to tackle its growing housing needs, Egypt has launched a series of housing projects and is developing 42 new cities, but many are underoccupied. The government does not have a social housing program for low and middle-income families, but only 2.2% of all social housing benefits Egyptians with the lowest incomes.
After the break, Ethiopia overtakes Dubai as a conduit for long-haul passengers to Africa. Do stay with us.